no demand or support. I just place them as you put them on because
Oh,
I didn't have the time.
so you just take the trades from the signal setting. So you just take the
Yeah,
trade from the
and
signal
place
thing.
it in. Yeah, yeah, that's right.
Okay, okay, that's fine, that's fine. Okay, so
Setting up myself is a different.
so you just put the
That's what
stop
I'm
loss
setting
in,
up
you put it,
myself.
yeah, and take the profit and so on, yeah. Yeah, so that's good, that's good, that's good. Yeah, and you've got that one open now, which is so you see what that's the thing, you see he's having an understanding of the market, but eventually, what we want to make sure we get to is you being able to put these trades on without any sort of support, without any sort of help, and that's the level I
Yeah.
would like everybody to get to. So we're gonna have a look at those things now, and try and move forward on there. Okay.
Okay.
How to let me just close this. Okay. Right. Now this is the first step we're going to take. So we're going to be looking at we move in like that, pull down. Okay. So what I'm doing is we're just looking again at the pullbacks and the breaks of the market. Okay. That's what we're doing. So looking at these breaks and pullback. That's what we're doing, right? And when we are going to be deciding to buy, okay, and when we're going to decide to sell, okay. So all I'm doing, I'm just highlighting the turning points in the market, okay. Because if you notice these supply and demand zones, we already got them on the weekly, and they're all about the turning points in the market, okay. Okay, so now this bit, this market has been going down in a downtrend. Just take this auto scroll off, okay? Because I'm going to show you when I would buy into this market, and then when I'm going to be selling this market. So I'm going to tell you exactly what I'm going to do, what I'm doing, and if I don't see those things, then no trade will be taken. Now, guys, all of these charts, the way they're set up, you'll have days in February. I will confirm the date. It's either going to be the 19th of February or the 24th of February when we will be meeting up at the Afro-Caribbean Resource Center. And I'll be giving you all the, I'll be setting up, creating all the charts, and you'll be able to use those charts for the next 6 to 12 months because all the supply zones will be on the chart. And a lot of times you see people analyzing charts and they have to put on, information on the chart. Now, some people might say, well, this chart is a bit crowded. But my argument to them is that why is it when you analyze and say you've got to be careful of this point, you've got to be careful of that point. Why not just leave them on there? But also, why not then look at the weekly chart and then also, right, because you're looking at the weekly chart, you have a bigger outlook and you're looking at the major turning points on the weekly chart. And then once you put that down now to your daily time frame, you've already got your supply and demand zones on. That's where the market tends to either make some turn in the long run because the market always leave clue. So the structure in the past tends to come back. The market always repeats itself because it's people. We get up every morning and we end up doing the same thing. Some days we go to sync and we don't do what we do on the day, but we end up doing what? We get out of sync sometimes. Yeah. And of course, that's what the market will do at times. But what we've got to do is look at the process and how we go about trading. And the way we go about trading, we've got to try and be as systematic as possible. Okay. Now, so anyway, this thing has been going down, right? So it's, break down, pull back, break down, pull back, break down, pull back. Now, here, this is my lower high, lower high, lower high, lower high. Okay, guys? So if you notice a high, lower high, meaning it's going down. Now, let me tell you when I'll be buying here. You see, if I have got my first, lowest low, okay, and I get a break. So this is my lowest low. So let's put this on, guys. So we're gonna let's put some stuff in there so we can actually see. So if I then put, say, and I'm just gonna be marking. So that's my, so let's just highlight these regions, yeah? So I've got, see the best one to use here. Okay. Okay. So I'm getting all of these lower highs, yeah? So I know it's not a downtrend, I'm getting lower low, okay? Now this bit here is my lowest low, okay? That bit there is my lowest low. Now you see if the market breaks above, my lowest low, because remember this could have been my lowest low, right? Then the market breaks up. Yeah, but I want to see the market breaks up. I would want to see the market breaks up, but the previous lower high, I want the market to breaks up even close to that one and then pull back. And if I get a signal at this point, then I'll be buying. But I've got to get either the engulfing the inside bar, or a pin bar. Okay, so then I wouldn't have taken a trade here. Say this now becomes it's lower than this one, so this is my lower low. Now the market breaks above. Okay, so this here, this is my, this low is this, I wouldn't have taken it, but this now becomes my lowest low, yeah? So I can kind of see some sort of change there, but I'm not confident. Okay, so now the market then breaks above, because this is my lowest low. The market now breaks above my lowest low, because this my lower low. Okay, so the market break, okay, above that. Now I'm waiting for the market to pull back. But if the market pull back somewhere there and I break this low and I get the right signal, that I'm buying. But remember, that is a reversal trade. That's how I put on my reversal trade. Let's carry on, because I couldn't put the trade on there because I didn't get the right signal. Let's go again. This here now becomes my lowest low. Okay. Now I'm waiting. I want to see the market breaks above and go above my lower, because remember, these are my lower highs, these are my lower lows now. Okay, I want to see the market breaks above it and then pull back. But the way it pulled back, if it pulls back, right, and break below this, then it negates a trade. Okay, so it breaks above, pulls back, then this is where I can take my first entry. But remember, guys, mark here, it has to be something looking like this, where it's an engulfing candle, engulfing this body. Then I'm putting an entry above for the market to put me in. And I probably put it there for it to break there to show me that yes, it's ready. Now, a better signal would be where? A better signal would be here because now I've got what? This is the low. This becomes now a higher low. What happens now? The market now this now becomes what? A high, a higher high. So the market now breaks above, right? This level here, okay? The mark, because remember the market was there now. We could enter here. So this could have been our first entry. Okay? So look, this strategy I called it the uptrend change. So the market was in a reversal. And what we're doing, we're looking for when the trend is going to change on the daily chart. Okay? That's what we're doing. And this first move is when this is the only reversal trade that we're going to take. And of course, you might put the trade on and it doesn't work. But what I've noticed, and I've looked at several charts, and I've noticed that it's working out all the time. But let's look at the next stage now, guys. So this would be my first, but we're going to call that the reversal trade. Now, the next stage now, the market then breaks. Because remember, the market breaks above here. So remember, this was a lower high. Now the market must then breaks above my previous lower high, breaks above it, pull back. Look, it pulls back there. This is the optimum trade now. This is now where, and we also get an engulfing because it engulfs the body of this candle. So now look at where we're going to enter. So this is going to be our proper entry because at this point now we believe the market has now changed its direction. And then remember, we're going to enter above this candle, targeting the next supply zone. Can you see what happens when it gets to the supply zone? Which we put these zones and we don't know anything at all about here. We put it on the monthly. We don't know anything about this, but look how the zones are nicely put for us. Yeah. Then we hit target. So we, probably this would be like probably 1 to 1.5. Yeah. And then what we want to do once we get to 1 to 1 and above, then we put our stop loss in. Then what we're looking for again. So then what we've got now, we've got a high, a higher high, a higher high. The market breaks down, pull back. This ultimately could also be another entry. This is, looking like a pin bar, but not really. But we've got a little engulfing there. This is where we could be entering again. Okay. Then we're running with the trade. We'll be entering there, but we're looking, this region here could stop us. This region could stop us. So probably ultimately we'll put in there. We just allow our trailing allowing our trailing to run. Now, so this is a higher high. Then the market breaks back again, pull back. Okay. At this zone, if we get the right signal again, we're looking to enter again at this point. So because now we know the trend has changed, every opportunity we get at these zones, we're going to be taking the trade. Then we enter here again. The market breaks above here. Okay, so it breaks above. So where we're looking for the next entry, we're looking for the mark. So we're looking, so we enter. Well, if we enter on this big engulfing here, then the scope is limited. So I probably wouldn't have taken this trade. Yeah, I probably wouldn't have taken this one. Okay, but anyway, the market breaks up a higher high. But what has happened now? The market breaks down and pull back. But the market didn't go higher than the previous high. So I'm saying, okay, seems strange. Yeah, so this was my highest high. The market breaks below, pull back, but the market then didn't make a higher high. So I'm saying, okay, it seems like the market now, wants to go down. So the market turns around now. So what I'm doing, I'm saying, okay, let's look for my first reversal trade. Okay, so when the market pulls back to this zone, yeah, and now decide that it's going to turn, then I'm looking for a signal. Now, this bit here is a pin bar, yeah, which is lower than this one. This, remember, guys, this is going to be a reversal trade. You're not trading with the trend because the trend is now up. So when I put this one, because remember, this is my highest high, the market didn't pull above it. Okay, the market pulled back up to this point and then start breaking down. Now I've got a pin bar and I've got an engulfing the body of the pin bar. Yeah, remember, these are the wicks, this is the body. Okay, now I could enter here, but I'm risking all of that just for this, yeah, zone. I probably wouldn't want to go in for that sort of big risk. If this, was probably there sort of thing, so I've got all of this move to run, then I would. Okay, so what happens now? The market breaks below, pull back, then I'm looking to enter here again. I probably would have been stopped out. Okay, so then I could have said, okay, this is, so it's not making lower highs now. So every time the market breaks back, pull back, I'm looking to enter. Break, pull back, I'm looking to enter there. Yet again, we come back to this point again now. And let me tell you now, remember, this market is in a downtrend. Okay. Now, I then look and I say, okay, it's making lower high, lower high, lower high. Now, this is my lowest low. What I was hoping was for the market to break above, yeah, this lower high, yeah. And when it breaks above this lower high, what I was hoping was the market to pull back. Just to, it didn't pull back as such there. But I was hoping for it to pull back there. Now, if it pulled back there, then I would have been buying. I would have been buying at this level. That's where I would have been buying. But it didn't. So what I'm now doing is the market now breaks up here, the previous level there, right? If I get the right signal here, then I'll be selling. Yeah. For the market to come back here, and then I'm buying here. Because it seems like the market now is changing its direction. But now it's moving in a sideways. It's just moving sideways and not doing much. Okay?
Yeah, Amir.
Yeah. So what can you tell me? What do you understand from this?
Well, I'm trying to understand exactly where you do. I mean, I do understand that, the right signals, if once you see the right signals, but I think it's not clear to me
Okay.
the rights the exact right signals. I mean, you mentioned the pin bar
Okay. Yeah,
and
but the pin bar and
engulfing.
the engulfing and also the and the inside bar, which is the main ones that we use, along with our supply and demand zones, and also because this strategy is the trend trading strategy that we look at. Okay.
Hmm.
Also, we look at double tops and double bottoms and the
Right.
sideways market type. So we try and limit it to the number of strategies. Now, what I tend to look at is the more the higher probability style strategies, and they
Hmm.
tend to work. And and that's the reason why we're able to see the success with the trades that been put on in the signal setting. Yeah, there are only two losing trades of all the trades that was sent out.
Hmm.
So which is really outstanding. So it's so that means we must be doing something right. Yeah,
Right, so it's just similar to what June had said,
yeah,
really,
yeah,
about it's making lower lows
yeah.
and lower highs.
Yeah.
Then you said it came to the turning point. We started having the um bullish candles,
Okay.
engulfing candles, and then it started going up,
Okay.
and then it's in an upward trend, and then eventually there is a turn again when it starts going down. So when it's in the upward trend, it's making the higher highs, higher lows, and then you're looking for the signals that you gave us on the reversal trade, which are the pin bars and the engulfing candles, and entering at a point where you can ride it down if you're selling or ride it up if you're buying.
Excellent, excellent. Smashing, smashing. So you're now going to click on this. I'm going to show you a quick scenario. So click on that. We go up to that point. Okay, so the market went up to that point. The market pulled back to that point. Then the market went up to there. So we're almost going to have our double top there, but then the market pulled on to here. Then the market pull up to here. Then the market pull all the way down to here.
Wow.
Okay. And then the market all the way up to there. Then the market pull down to there. Then the market pull up to there.
Okay.
Then the market pull on to there, yeah? So that's what you're gonna do now for me, okay? Yeah? So what I'm gonna do, let's and how we could delete this, we could delete it easily by looking. We want to keep the horizontal line, yeah? But we just want to get rid of the trend line. So if I can just click on that, and all the trend lines are gone. That one as well. It's gone. Yeah, so we can clear it from object list. So have a go now, June.
Okay. That wasn't what I was asking about, actually. What I was asking about is how do I do it?
Yeah, just click on the chart. Click on the chart and just click on it. Press on the chart and then drop. That's it.
Ah.
Yeah, and then let go. Once it's done, you get the line, yeah? Then we'll go back to the thing and then do it again, yeah? So go back up the trend line. And click on, no, not that one, yeah. Yeah, and then click on it, go back to the trend line again. So go back to trend line. And then click on the you've got to click on the trend line, click on it once. And then go back to the chart now. And then click at the point where you want to move from. And then hold it down. All the way down, all the way down, because we're going from top to bottom now. So we're going from left to right.
Right.
So okay, that's fine. Yeah, that's fine. Do the next one now.
No, when you make it short.
Yeah.
To oh Lord. Okay, I'll get another one. Yeah, you make it short to
So all the way down to the turning point where we have the turning point down. That's it. Yeah, and stop there and let it go. That's it, we're done. Then go up again.
Okay. Yeah, when you put in on your trade, then you just put them as a little, signal to say this is where you've taken the trade. That's the one I was on about.
Yeah, it's the same thing. It's the same thing like that. Just that little blue line that you see up there. Same thing. Excellent. Wow.
Is that one or stop here?
No, go up some more. Yeah, that one. Yeah, that's fine. Yeah, that's fine.
All right.
Okay.
Well, this isn't hard. This is it's where you cut this, where you chop it off and you just use it as a little marker. That's the one I need to learn.
Okay.
Fine, please. This is a bit like have I done that wrong?
That's excellent. Well done.
Okay. This is a bit like putting on your horizontal lines in a way.
Yeah. But now we're just going all the way down now.
Okay. Wow, that's a long one. You know something? If you were going on a downward, would you just stop your trade out there? You could, couldn't you?
Yeah, man. If you bet that it's gonna go down, because remember we can bet that it's going down,
Yeah, I know. What I'm saying is, if it went down this far,
and you were in profit by a lot, you'd want to
You would want to stop it out, isn't it?
No, you would want to trail your stuff. You'd want it to go as far as it can go.
What I'm saying is you'd let it go that far and then just, when you see it starting to retract, you cut it off, yeah?
Yeah, you can. Or you could just bring your stop loss down. So once you're in 3 to 1 and so on and so forth, then, you know, that's good, you know.
Okay. Right, from here now, so we go up. So where are we going up to?
Yeah, so
are
we're
we going up to here?
Well, we could put it up to the next point because you see, really, if
Up here?
yeah, let's put it up to there. Okay, so if I then carry on from here now, June, so I can.
Okay, no problem.
Yeah, but you see how it works, yeah? So we go down there, and then we go up there, yeah?
Mm-hmm.
Okay, and then we go down again, and then we go up there,
Mm-hmm.
and then we're in a sideways market, so I just put it down to that level there.
Mm-hmm. And then just bring it back straight, yeah. Mm-hmm. So what is this telling us?
This is just telling us the cycle of the market, how it's turning and how it's moving. Yeah, because we just want to see what's the market doing, what other cycle is the market in at the moment, and what we're trying to do, because we want to time the market and get in the market at the right time. Okay, so that's all we're trying to do, you know. And if we can time the market properly, you know, then we're in business. And then what I'm going to do now, because tonight the focus of me tonight is to teach you the uptrend and the downtrend, and then for you to then create a template for me for homework and what.
Create a template like this?
Yeah.
So we're going to create a template where we do all these lines?
Yeah, and because let me show you now, right? I'm going to show you what my template look like. So I've got this template where basically, but you've got to first understand it, yeah? Now, so this is what we've got now. We've got a situation here now where the market is going down. So this would have been, so this situation, this is where, so this is where we started our data from, okay? Okay, and then we have this one going up here, yeah? Okay, so this is what we've got now. So this thing was higher high. So the market breakdown pull back, but the market pulled back at this zone, right? This level. But then we wouldn't have been able to get into this trade anyway. Yeah, because it pulled back, but this candle was so huge, there's no way it would have been able to get in. Okay? Now, so with the market is pulled down again, so we'll wait and wait. Breakdown, pull back. Now the market pull back at this zone. Now, if I get the right candle, then this is the trade that I'll enter. Because remember I said, right, that if the market breaks down, this is my higher high, yeah? But the market breaks down and pull back. This is going to be my first trade if I get the right signal. However, this is at the supply zone. However, this trade is a reversal. Now, what I'm waiting for is for the market to break down again and pull back. But the next time the market pull back, say here, this pullback is lower than this one, and then I get the right candle, yeah, signal at a zone like this lot. But anyway, I didn't get anything there. The market then breaks down further. The market then pull back. Now it pulled back there. I got a signal, but this is not one of the signals that we're accustomed to. So I probably wouldn't have taken this trade because we want the engulfing, we want the pin bar, yeah, or we want the because even here, possibility that, you know, one of these being well, this is not a pin bar, this is not really a pin because it's not 1/3, and even this looking like a pin bar, it has to protrude above, like this one here. This is a pin bar because it protrudes these lot. It's higher than them. You can see clearly that it, you know, the people went into the market and stop out all of these people who think it's going to go up further. Okay. Now, so let's look now. So anyway, so we break down, we're looking for a sell there. The market then breaks down, makes lower low than that one. Okay. So the market then pulls back up to this level. But then if I can get the right signal here, this could almost be like a double top. It top there and then top there again, top there again. So we're looking to sell, but I still didn't get a signal. So I still can't take the trade. Then the market breaks down, pull back. Yeah, because now the market is no longer looking like a trend. It's more looking to me like it's range bound at the moment. So, which I'll be talking about next week. But today we're just looking at those trending ones. We're looking at just how we look for this trend reversal. Yeah, whether we're going uptrend or we're going downtrend. On the first trade after we've made the lowest low. Okay. So let me show what I'm talking about here. What we've got here is lower high, lower high, lower high. This is now the lowest high, yeah? Then the market then breaks down past this lower low to make the lowest low. Then the market then breaks above the lowest high, and that's what I'm looking for a change in direction. Okay, guys, that's what we're looking for. So remember, I did say as well that I'll be looking to buy. Here. But this buy that I'm looking to take there is a reversal trade. Make sense? Because I'm not sure that this, yeah, lowest high will be I'm not sure if this thing is not just pulling back now to start a downtrend. Yeah. So what I'm looking for then, yeah, is this. So the market, this is its lowest high. This now becomes my lowest low. Now I get to my lowest low, the market has to break above my lowest high. Okay, if the market then breaks and pull back to a demand zone, then that's going to be my first buy. It's almost like I'm testing the waters. Now, it could be that for your trade on this one, you're using, say, a stop loss. Depending on your size, you say you're going to risk, depending on your account size. For this type of trade, you're only going to risk £50. Now, remember, when these trades take off, they go for good. They go for 200-300 pips. Yeah. So risking £50 will compensate. Now, your normal trade now, which you say this is your first buy, could be the one that you say, okay, this one is my normal £100, right? This is £100 I'm risking for that trade. Okay, so that's what I'm risking. Okay, so this is where you're gonna risk 100. This is where you're gonna risk 100. But for the first one, that's when you're gonna risk the 50, because this one is a reversal trade. Make sense? There's no guarantee that it's gonna go at this point. So what I've done, I've just reduced my risk, because remember, risking £50 here and risking £100 there, it's roughly that. I'm just saying that, because I'm going against the trend now, because this market is still obviously in a downtrend, because it's still, still sloping down this way. Now, the fact that now I'm starting to get higher low and higher high, yeah, then now I'm starting to think that there is a reversal, but with the right signals, we're going to take the trade. And if we're consistent with the way we do this.
So, Marlon, can I?
Yeah. Yeah. What are you saying? Yeah. What's your question?
Yeah. Can I ask? Would you put a 50? The question I'm asking, and when you're certain of the direction, would you then put another trade on? Could you just chase 2 trades up on each other? Or would you just
Yes,
leave
you
it at
can double up.
50?
You can double up your position, but guess what happened? There's no certainty in the market. Yeah, the market is random. So what we're trying, because we know the probability is that this thing will continue in the current direction. So what we're saying then is that if we can have a rule within our trading plan and rules and money management that if we're going to take the first higher low after we've got the lowest low, then we won't go over normal. Say, for example, you normally would risk £50 in a trade, right? That's your maximum risk per trade. And you say your maximum number of open
Right.
trades is 5. Now, for this one, I could say, okay, I am only going to risk, if I'm taking this one, I'm only going to risk £25. Okay?
Or less.
Yeah, no less, no more. £25. Then I'm going to risk on this trade. And then this one is 50, that one is 50. But remember, at every point, there's no guarantee that we're going to win on the trade. But then,
keep your eye on.
yes, but so the trades that you're currently in that are all in profit, that's the reason what you're doing is you look at the trades and then we try to ensure that we manage these trades, that we allow these winners to run. Because once these winners are running, and say for example, like I look, one person was up £600 or £700. Now, if you end up having a few losses, then that will help you out. Because ultimately at the end of the month, that's the time when you want to look at and say the overall profit. And when I say it could be in pips, it could be in monetary terms, yeah. But then don't try and chase after the trades. Let the trades come to you. Make sense? Okay, guys. Now, so that's now for the one before was for the change in from going down then to up. Yeah. Now the similar rule now. Now we got higher high, the highest high. Now what we want to see now is that the market break below, pull back. Now this pullback at that point, okay, it pulls back, but it didn't break the highest high. Now once we get this point, and if we get it at a particular zone, if you notice the zone is even like, with some sort of head and shoulder, but I'm not trading that. We are looking at the market in as simple as possible. I don't want to talk about any head and shoulder. The only thing I'll talk about is double top or sideways market. Yeah, I have only got 4 strategies that we're following. And within the 4 strategies, we've got up, we've got down, we've got the reversal trades that we said we're putting on. Okay. And we've also got, and the reversal is when we've got a double top, which I'll be teaching you as well. Okay. Now, so the market breaks above the highest high, breaks down. When this market decided to pull back, it didn't break above the highest high. So at this point, we're going to look to a sell trade. Now, it might, as we said, we get our money management. Yeah. Market breaks down, pull back, we're looking to sell again. And we carry on doing it until the market decides to do the reversal of this. Yeah, we get a lowest high, then the market breaks up, pull back, and so on. Yeah. Me, because you said you understand it now. Can you now? I'm going to give you the thing so you can now write it. Okay.
Okay.
So you'll be able to write on this chart. Now talk me through the entire process now.
So from here.
Yeah. No. Start from when we're looking for that trend change, because we're looking for a sell trade at the moment.
Okay. So you're gonna see a higher high and a high low here.
Yeah.
But then this is gonna be the highest low. So you wait for the next one as a tester to see if it goes up and comes back down. And then after you've seen that higher low, you can you wait to the lower high and you can place your trade there because you know that it's already gone through its higher high and it's gonna come back down.
No, the fact that it didn't pass its highest high, then that's a bit of confirmation to say, look, this market might be reversing. Yeah. Yeah. And then, the part where you see the word sell, the market yet again, because you know what could have happened here is that the market could have then, break here and go above here. So even though in the trade, so we got into this trade and we went down there, we got some profit. We made sure so we brought our our stop loss, so we can say we bring our stop loss there, right? So we entered there, but we put our stop loss there now. So we so to secure some of the profit. But then this market could then go up like that, and then go up to this point, yeah. And then decide then that it's just going to carry on, and not pull back down, yeah. So remember, we are predicting the market, yeah, and there's no guarantee in our prediction. Nothing guarantees success in trading. However, we have got to be consistent. We've got to understand what we are doing, how we go about placing our trades. Okay, so what I'm now going to do, I'm then going to show you now some of the trades that I send out in the Signal service, because ultimately I'm hoping that most of you inside here, when I put these trades out in the Signal, you'll be then going onto your own chart, looking at well, I don't like the reversal trades. I rather to wait until it gets to this point. I don't want to take this one. I'd rather take this one. Yeah. Some people might say, you know what, I want the first one. I'm going for this one. And, this one is the best one for me. And every time I send Signal out, and if I send for this one, then they're like, and I'm going to be putting reversal because that's the reversal I'm going to call, right? Now, you then take that one all the time. You take it 20 times. And out of the 20 times, you've had 14 winners, 6 losers, right? And you say you're profitable. And especially if we're getting 2 to 1, right? Now you're thinking that's the only one that you want to take. So then what you do, you're doing your own sort of looking at the chart and so on. But then when I send the Signal out, you then go and say, okay, let's look and say, yeah, that one is the one that for me, I'm going to take this one. See, you've got a choice. You don't have to be taking the trades that I am sending out. Also, you've got to look and say, I'm in profit. Say, for example, some people are in profit based on the Signal sent out. Then you might then see other trades come up, and because you're already in profit, you can also take those other trades because you're secure. So remember I said as well, in terms of money management, if you say your maximum open trade is 5, and each with a maximum of £50 risk per trade, but then these trades are all then at least 1 to 1. Already you've moved your stop loss to 1 to 1. Then you've earned the right to open other trades, because for one, you've got 5 trades that's already in profit 1 to 1. And if you get other setups, but then you could also have a rule where you say, okay, if I'm in 1 to 1 out of the 5, 3 lots of trades, then what I will do is I've earned the right to open another 3 trades if the trades come. And then also those 3 trades, I might say to yourself, if they're correlated, if those 3 trades are correlated, I won't put the trades on. Yeah? So we can look at it like that. Now, hopefully all of this has made sense, and you fully understand how we go about looking for change in trend. Next week we'll be looking at the sideways market, and we'll also be looking at the reversal. We're looking at sideways market, and also we're doing another and double top and double bottom, which is another type of reversal trade. Okay. Now, this one I call predicting the trend change, because that's what we're really doing. Okay. Now, and I try and do it in such a way that it makes sense, because there's so many people out there teaching, but they don't know to teach. So when they explain stuff and I look at it, it's just like over my head. So for me, I had to find a way that made sense to me. Now I'm hoping it has made sense to you, because it's now made sense to me. And it took me what? Took me 3-4 years to understand. Now I'm hoping I can do this thing in one night, and that 4 years of trying for it to make sense and all the people teaching it just still didn't have a clue to me. I know I come up and I actually create this way, because I don't see anybody else explaining it this way on YouTube. Now I'm hoping that, with a bit more practice, with a bit more drawing, and all you could do, you could literally just get these lines, because I've recorded the session, so I'll be able to send this out tonight at the end. I'm not sure if YouTube will allow me to do more than 60 minutes, because I think this probably gone over 60 minutes, but I'll see, right? So I'm going to pause it now because I don't want to go over